Good afternoon and welcome to our event today, Equality of Opportunity in Action, Improving Access to Capital for Minority-Owned Businesses. I'm Tom Quabbin, Executive Vice President for the Center for Capital Markets Competitiveness here at the U.S. Chamber, and I am pleased to have worked with our colleagues from the Chamber's Equality of Opportunity Initiative to organize this event today. The Chamber is also proud to partner with Chase for Business for this important dialogue discussing pathways and opportunities for minority-owned businesses to access the capital and funding needed to support their foundation, growth, expansion, and continued success. Research from the Chamber's Equality of Opportunity Initiative tells us that Black entrepreneurs are nearly 3 times more likely than their white counterparts to be negatively impacted by a lack of financial capital. It is clear that Americans don't have equal access to financing to start, expand, or grow a business, meaning that our economy isn't reaching its full potential. The Chamber's Center for Capital Markets Competitiveness has been working with the Equality of Opportunity Initiative and our Chamber members to come up with real-world solutions to help increase access to capital and stimulate Black and minority-owned business, minority entrepreneurship. If we don't act, too many Black and minority startups will continue to be caught in a cycle of failure. The odds of starting a successful business are long enough. You don't need to have the cards stacked against you. More from my colleague Evan Williams in a minute on that. Driven by data and informed by conversation with leaders across industries, the Equality of Opportunity Initiative is advancing the private sector and policy solutions at the federal, state, and local level to help close race-based opportunity gaps in several key areas that include entrepreneurship and wealth inequality. During today's forum, we will hear from representatives from government, small business, and the banking industry to discuss the challenges encountered by entrepreneurs and the opportunities available to them, and most importantly, we'll hear solutions and tangible steps leaders can take to help break down these barriers. To learn more about our Equality of Opportunity Initiative, visit us online at www.uschamber.com/EOI. I now want to introduce Evan Williams, Director for the Center for Capital Markets Competitiveness, to tell us about a report the Chamber is releasing today and offer a snapshot of initiatives that policymakers could take up to improve minority access to capital. Evan, over to you.
Thank you, Tom. As Tom mentioned, my name is Evan Williams, and I'm a director here at the Center for Capital Markets Competitiveness, where we're focused on serving as a conduit between the financial services regulatory landscape and the business community. I'm excited to be joining my colleagues at the Equality of Opportunity Initiative this afternoon. We have a slide deck that I think we'd like to put up. At the Chamber, we work to help the business community innovate, stimulate the economy, and improve lives. Today's event and report release are aimed at that exact goal. First slide, please. It's well understood that entrepreneurship can be a catalyst for economic mobility. However, a recent study found that if the number of firms owned by people of color were proportional to their labor force participation, the U.S. would add more than 1.1 million businesses, supporting an estimated 9 million additional jobs and adding nearly $300 billion in workers' income. That's a huge opportunity. Time and again, however, studies show that opportunities to access capital are not equal in the United States. For example, research indicates that Black-owned entrepreneurs are half as likely to get financing as their white-owned competitors. And Black business owners have been shown to be more likely to rely on alternative forms of credit for their financing needs, often putting them at a disadvantage due to higher costs of debt and decreased latitude to amortize. Next slide, please. The Chamber is committed to addressing systemic racism in America and removing barriers that inhibit economic mobility. The report the Chamber is releasing today centers on increasing financing opportunities for minority-owned businesses through improved access, analysis, and representation. The policy recommendations contained in the report consider specific issues in accessing capital for communities of color and other minority entrepreneurs and offer solutions to those issues. We are endorsing 11 proposals, the majority of which are bills that have been introduced to this Congress or in previous Congresses, as a means of igniting a robust conversation about how entrepreneurs of color access capital, both among policymakers and here at the Chamber. Without further ado, some of these recommendations include, if we could go to the next slide, the Microcap Small Business Investing Act, a bipartisan bill that would allow for more diverse venture capital fund managers and incentivize investment and capital access for small business owners in low-income and underrepresented communities. Representatives Joe Neguse from Colorado and Young Kim from California came together to introduce this bipartisan bill to create smaller funds under the Small Business Investment Companies designation established by the Small Business Administration, effectively providing a wider on-ramp to entrepreneurs in underserved geographies. The bill focuses on small manufacturers, businesses serving low-income communities, businesses owned or controlled by individuals in underrepresented communities, and rural communities. Speaking of increasing access for underserved communities, next slide, the Credit Access and Inclusion Act, a bipartisan bill authored by Senators Tim Scott from South Carolina and Joe Manchin from West Virginia, is aimed at improving creditworthiness. The bill would allow property owners, energy utilities, and telecommunications providers to report on-time payments to credit bureaus, the data from which would then be able to be factored into underwriting decisions for financial products. This would, in turn, allow individuals who are careful in making monthly payments, but may not otherwise have a history of traditional measures of creditworthiness, to have access to the credit system, including for entrepreneurship. The bill from Senators Scott and Manchin drives at an essential problem that not all access is created equal. That's why the Chamber is endorsing the Expanding Opportunity for Minority Depository Institutions Act, as well as the Promoting Access to Capital in Underbanked Communities Act, both targeted at providing support to financial institutions that serve underrepresented communities. So next slide, please. The Expanding Opportunity for Minority Depository Institutions Act, authored by Representative Beatty from Ohio, would strengthen minority-owned financial institutions by providing support in meeting regulatory compliance requirements and providing other targeted guidance, thereby freeing up capital to lend at a greater capacity. A 2019 report from the Federal Deposit Insurance Corporation, or FDIC, finds that minority-owned banks issue a greater volume of Small Business Administration 7A loans to low to moderate income customers than other banking institutions. Likewise, financial institutions designated as Community Development Financial Institutions, or CDFIs, are dedicated to serving low income and distressed communities. Next slide. The Promoting Access to Capital in Underbanked Communities Act, authored by Representative Barr from Kentucky, would lower the barriers to entry to becoming a CDFI, meaning that more banks would be eligible to issue loans in low to moderate income communities with support from the federal government, increasing the focus on underserved communities and what can be achieved there. Finally, we think to truly get a more comprehensive picture of what barriers exist for minority entrepreneurs in accessing capital, next slide, we think the Securities and Exchange Commission's Office of the Advocate for Small Business Capital Formation should develop recommendations for how to help minority-owned businesses raise capital. Final slide, please. While we've only offered highlights of the complete list this afternoon, executing on any number of these recommendations could prove impactful in increasing access to capital for underserved and underrepresented communities. We are dedicated as a whole at the Chamber to addressing systemic racism and catalyzing economic mobility. And we hope that as we partner with policymakers in achieving these goals, that this report will prove helpful. Thank you.
Thank you, Evan, for giving us a look at some of the key policy proposals that we here at the Chamber not only support, but are actively working on to advance through our Equality of Opportunity Initiative, which, as you discussed and others, is designed to advance private and public sector policies and solutions to deal with race-based opportunity gaps in America. I'm Rick Wade, the Senior Vice President here at the United States Chamber of Commerce, and really looking forward to hosting this next conversation. You know, as we think about policy and the role of government in helping minority-owned businesses access the financial investment and the capital that they need, not only to grow, but to expand and compete, not just domestically, but even globally, one particular agency comes to mind for me, one that I know very well, the Minority Business Development Agency at the United States Department of Commerce. Quite frankly, it's the only federal agency that exists solely dedicated to supporting the growth and the competitiveness of minority-owned business enterprises in our country. The U.S. Chamber has had a long-standing partnership with Mbda, and we're excited about our partnership, our relationship, and excited to call them a partner. In fact, we're among one of the leading entities that advocated for the recent passage of the historic Bipartisan Infrastructure Act, by the way, which includes for the first time ever, the codification, making permanent the Minority Business Development Agency, expanding its reach and increasing its funding tremendously. And so we're excited to have with us today, Carmen West, who I've known for years, Senior Advisor for Access to Capital with the Minority Business Development Agency at the Department of Commerce. Carmen, so good to see you. Thank you for joining me.
Thank you, Rick. So good to see you as well.
You know, Carmen, we're still celebrating. I know that I am sort of this historic milestone now that, and for purposes of this conversation, you know, since 1969, since its inception, it's sort of existed by executive order, the Minority Business Agency under President Richard Nixon. And for the first time now, Mbda is codified. It's a full agency. It's permanent with the funding. What does that mean for Mbda?
Rick, you know, all of us are still celebrating as well as the entire ecosystem. As you know, there has been no legislation impacting ethnic-owned businesses since the 60s. So as you know, this business segment has evolved tremendously. So codifying this agency really puts equity at the forefront, as the president has promised when he came into office. So we are super excited. We are ready to hit the ground growing, and we're looking forward to change the narrative.
You know, you talk to minority-owned businesses across the country, and without fail, access to capital is always front and center as perhaps the number one challenge, but also the opportunity, I believe, to strengthen these enterprises across our country. But and Evan Williams earlier from our policy team talked about some of our key policy proposals that we believe could play a significant role in driving economic equality, if you will, getting more access to capital flowing. Tell the audience, tell us a little bit about Mbda and its role, and perhaps some of the key wins and successes that you've led and the agency has led over the course of the last several years.
Sure. So Mbda, as most people know, is, like you mentioned, the only federal agency that's designed to grow and expand ethnic-owned businesses. And we do that under three ways, Rick, because we understand that businesses have a greater need for sales and job creation. We focus on access to contracts. Because we realize that 95% of the world's borders are outside of the U.S., we focus on access to exports. And again, because access to capital is the number one impediment, capital is really at the forefront of what we do. Based upon the very succinct initiatives that the president put in place, Putting the access to capital piece in front really is how we're going to drive our new record of having these new businesses recover from COVID-19 and civil unrest. Two things that really come to mind under the American Rescue Plan is the State Small Business Credit Initiative. We've had a keen focus on that. That's $10 billion that's injected into the ecosystem to help businesses grow and recover. 2.5 billion of that is set aside for the socially and economically disadvantaged individuals, which of course are those individuals that are normally ethnic owned, which is in our business segment. In addition to that, that legislation set aside $500 million that Mbda could potentially receive to provide technical assistance. That technical assistance is actually very pivotal to these businesses being able to cover. But secondly, in that same legislation was the largest investment into childcare since World War II. And what that means for us as a minority focused agency is that that opens up opportunities to have more dollars invested into those types of businesses. Last but not least, minority banks, lending institutions such as CDFIs will help us bridge the gap with the shortage of finance. And in that legislation, there were dollars set aside specifically for those ethnic-owned CDFIs to help this business segment. So we are very heavily focused on everything that touch capital because we realize that from debt to equity, our businesses will need some additional assistance. So we're super, super busy, but we are excited, just as excited as our business segment, to be able to close the gap on the narrative of access to capital.
Carmen, that's really exciting. I mean, you have a plate full. And in the Infrastructure Investment and Jobs Act and additional Mbda centers, is that correct? Or in particularly focus on rural areas? And I think another area that I saw, which I was extremely excited to hear, is this focus on entrepreneurship. How do we inspire the next generation of entrepreneurs, in particular in partnership with historically Black colleges and other minority serving institutions? I believe that is in addition to what you described, other areas that you'll be focusing on. Is that right?
Yes, there has been tons of legislation coming down the pipeline for Mbda to put our hands in, to add our touch and use our expertise in helping to grow and develop our business system and ecosystem. So yes, HBCUs, there's legislation for the rural business centers. There's also legislation that's currently going through systems right now on the Minority Business Resiliency Act. So we as an agency are fully focused. And as you said, our plates are extremely full. So we are super excited for the administration's commitment to equity and how we might be able to play a bigger role.
You know, I was thrilled to hear you reference minority-owned banks, and because the capital, I think unleashing capital means that we have to bring in every institution across the financial sector that we can. You know, I was reading just some data from the U.S. Chamber where we found that Black entrepreneurs, for example, are nearly 3 times more likely than white entrepreneurs to have business growth and profitability negatively impacted by a lack of financial capital. Then you add onto that, Carmen, the disproportionate impact of the pandemic. Early in the pandemic, we found some 66% of all minority-owned businesses were concerned about permanently closing. I think the Institute, the National Bureau of Economic Research, found that from February to April 2020, an estimated 41% of Black-owned businesses, 32% of Latino-owned businesses, and 26% of Asian American-owned businesses closed, as compared to 17% of white-owned businesses. So that's a lot to sort of unpack and deal with. But just curious, how are you thinking about this type of challenge that's facing our minority businesses? You know, again, exacerbated by the impact of the COVID-19 pandemic. How is Mbda addressing these long-standing gaps, not just to survive, but thinking about how they thrive and grow in the future?
Thank you for that, Rick. You know, I'll say that our acting national director, Miguel Essien, has put forth some very courageous ideas about how we access capital. You know, one of the things that, you know, we've been working on a long-standing time is to having our minority banks come and play a larger role. You may have seen some of our partnerships with some corporate partners injecting additional capital into those banks, whether it's Netflix, who injected 100 million, Citibank injected tens of millions. So the agency as a whole is working with the lending industry to ensure that they have the tools that they need to be able to help touch these businesses. Because after all, they are the boots on the ground. They are the individuals, the institutions that the businesses will look to first. So we're creating a platform for us to have better engagement, working with the National Bankers Association, working with the Opportunity Finance Network, working with the African American CDFI Alliance, to ensure that all of the lending options are coordinated in a way so that they can actually touch these businesses. So we call it EcoScope. It's our way of really injecting the universe, the business segment, to working with its partners collectively, right? So think of it as Facebook's metaverse. So we're looking at a strategy for that from a finance perspective.
Did you? I love that. I think you said EcoScope. Is that correct?
EcoScope.
I really like that because truly it's got to be a broad ecosystem to sort of wrap around and support these minority businesses. Carmen, how much of it is, I guess, what I would call knowledge access and a knowledge gap? As I travel across the country, I'm oftentimes struck, quite frankly, at the lack of knowledge that some small minority businesses have about the government and private sector tools and resources that are available to them, or perhaps sometimes the processes may a little bit too complicated for them to access and understand the lending process. How do we solve the knowledge gap, the education and outreach that's needed to touch every minority or businesses, not just where they are geographically, but where they are in the continuum of getting credit and lending and access to capital?
Mm-hmm, mm-hmm. Rick, that's a subject that touched my heart because I am a recovering entrepreneur. I'll call it that way. I built an 8-figure business and failed when the market crashed back in 2008. And my biggest challenge for failing was because of the technical assistance needs that I wasn't able to locate. And had I had those resources in hand, my business would probably look a little different. So I changed my business to more of an advocacy consulting firm, helping businesses to connect and add technical assistance. And it wasn't until I became with Mbda that I was able to transfer that talent here and provide those tools for those businesses on the ground in our current role. But we enter into public-private partnership with about 60 different organizations across the country. And these organizations are called our business centers. They are our boots on the ground. So they are providing world-class technical assistance to businesses to help with that knowledge and credit gap. Our business centers are led by public and or nonprofit organizations who have an alignment with our mission. The individuals that are running those centers are people who've been in the trenches like myself. They are former entrepreneurs, lawyers, educators, business owners, those individuals who really understand what it takes to actually access capital, contracts, and exporting. And I like to liken them to mini Accentures or Bain Capital, right? Because we realize that our businesses and our business segment need a little bit more. It's a little bit different than, some of the traditional technical assistance, whereas we're educating them on processes. Well, for us, our business centers actually package loans. So we are actually working with the underwriters to help get a successful transaction. And that's why our numbers are so high, because we go in and really do that extra work. So we are almost in the underwriter, the loan officer, as well as the lender's co-partner, because we want to make sure that these businesses have the tools to be successful. Now, we realize that right now, post-COVID, after PPP, a lot of our businesses have a lot of cash on their balance sheets because they are dealing with the workforce shortage, right? So we are working with them to help mitigate that. We're helping them understand capital in a way to where they're able to attract it versus chasing it. So access to capital, is so significant again, just to the entire ecosystem and the economy. So we have to make sure that we're helping these businesses, in some cases, holding their hands, educating them on everything from debt to equity.
Yeah, Carmen, I'd be curious because you've been an entrepreneur. You're one of the experts in this space, and I know your work. But something as simple as relationship, how important? Because we saw during the pandemic and PPP lending, et cetera, where there's one thesis is that minority businesses didn't have the relationships with the banks to get the lending. We know there's some other challenges there. But how important are personal, professional relationships when accessing capital?
Back in my day, being a former banker in college, we used to say that, those relationships are key to having any level of advancement, which they still are today. But we do have to also have the onus on the lender. The lender has to want to have the same goal in mind, which is changing that narrative and interested in providing those funds for the betterment of that census tract or community, and that business. So one of the things that we really rely on is that double take. So we call it back and forth. And hence why we work so closely with our minority banks and our minority CDFIs, because they're in those communities together already, right? They are already probably, making transactions. So making those low level introductions is key. Now, some of us may think that because we're going to this digital environment, that those face-to-face relationships no longer matter. That is so far from the truth. Algorithms can't shake your hand. They can't ask you about your family. They can't really get close enough for you to make sure that you are choosing them for the transaction. Well, our minority banks and CDFIs does have that. And so they're really looking at relating to these businesses in a way to where the businesses think of them first of mind. And we're conditioning our businesses to think of that way as well. I'm not saying that we should not, do business with our larger organizations like, some of the mainstream banks that are available out here, because they too are really important. And they too play a very big role into helping, disperse capital into our communities. But what we're helping our businesses understand is that sometimes it's going to be that human touch that's going to make that decision outside of the traditional underwriting guidelines. So, just as it is important in the finance space, it's also just important on the contract side as well. And so when businesses are going after these types of projects or initiatives, to make sure they get to know the people who are putting it together, make sure that they are, following through, because I see, this ecosystem is coming back to how it was, 30 years ago when, your banker, you can call speed dial on the phone. So I do see, those relationships being in forefront, playing a big role for businesses today.
One last question, and we'll start winding down. But you referenced earlier, which I'm a big proponent of. You talked about exporting, and the reality is that 95% of the world's consumers live outside of our borders. And the old saying about why did the bank rob the bank is where the money was, right? So we got to go where the consumers and customers are.
That's
and
right.
We're working closely with XM to help in that regard to get more minority businesses understanding the opportunities through XM Bank. But one other area I'm curious how you think about is the area of private equity and venture capital. You look at some of the numbers, 1%, 2%, 3%, perhaps is going to minority or Black founders. Are you guys doing any work in that area? Because I think that may be another area where the private sector can play a tremendous role.
So yes, we are. In my private life, I actually had some experience in starting a venture capital fund back in 2013, and unfortunately, it wasn't as capital was not as accessible as it is today post George Floyd, unfortunately, in our ecosystem, we talk about those relationships. We don't always have relationships with those individuals that can provide investment. However, we've seen a considerable amount of shift in that space. You have JP Morgan Chase, Nike, Netflix, all giving hundreds of millions of dollars for investment into ethnic-owned businesses. So I'm happy to report as a result of that, my team, the Access to Capital team, created our first venture capital program, which is called the MBE Equity Multiplier. That program was put together specifically to help minority businesses attract more equity. And what that means is oftentimes we don't understand that equity is giving away part of our business. And so if you think about how minorities got into the C-suite got into minority businesses in the first place, it was because they weren't having access to the C-suite. So they decided to create it for themselves. So you saw this influx of these minority businesses. So with that, from a cultural perspective, Rick, is that it's difficult for you to think about giving away a part of your business that you've grown and that you've raised from infancy. So what we've done with our MBE Equity Multiplier program is really to help businesses understand equity and how it could be beneficial for them from a long-term perspective. At the same time, we're building relationships with the VCs and the funders themselves, right? Because the reason why we receive 1% of the money is because 95% of the VC money is held by white men. So in order for us to address and open the purse, if you will, we have to make relationships with those individuals and help them see minority businesses as good investments. And so that's really what our technical assistants have been about since the Obama administration, is really changing the narrative of how we see technical assistance in ethnic-owned businesses and helping these ethnic-owned businesses understand the amount of dollars and resources that they have available to them. Venture capital is a very unique space. In our partnership with Martha Miller at the SEC, we've come up with strategies how we can better position minority businesses to be more attractive to, and creating a pipeline to those funders in that space. Many of the programs that are available in the ecosystem are not really focused towards minority businesses. So we're working with organizations, incubators, accelerators to help them transition these minority businesses to be ready for equity. And I'm happy to report that Mbda, with the help of my team, we have our first Mbda business center that is going through the licensing procedure to be a small business investment company from SBA. That is a huge win for us, because that means that not only the smaller businesses who are needing equity, the larger businesses can also get equity. So yeah, we have the first ever business center that is a small business investment corporation, as well as a CDFI and an MBDA business center. So that's Stella Clark working out of Philadelphia, Pennsylvania. So we're really excited, to really, again, and you hear me say this quite a bit, it's really changing the narrative. Businesses before didn't think that we could even, touch equity, but we've seen an overwhelming amount of change. Now, that doesn't mean that there's not more work to do, because, again, you have to go with the individuals who are holding the purse, those individuals who make those funding decisions. So that, codifying MBDA helps us expand our reach so we can continue to do that.
Wow. SBIC, I really love it. What exciting work that you all are doing at MBDA. I'm a little biased because I worked at the Department of Commerce and years back, and I'm very fond, I've always been fond of MBDA, and so happy about the expansion, the codification, and the opportunities that lie ahead. Last question. This work, entrepreneur, you're on the policy side, you've been on the private sector side. I'm in minority business in Midwest or in rural South. And this conversation perhaps is as much as I've heard about MBDA. If I'm that minority owned businesses and I've not been in the game with MBDA, how do I get connected to MBDA and access all of these amazing resources that you shared today?
Sure. So you can visit our website, www.mbda.gov. We do have a list of our business centers there. We also have specialty centers that focus on export and manufacturing. They are located across the country. None of our centers have borders. So if you are in the great state of Ohio, like I am, and you need to have assistance in Houston, Texas, our Houston, Texas center will see you and will address you just as if you were in their backyard. So that's another plus. Also, you get to tap into the resources in that other state that may not be available in your state. We have business centers, we have specialty centers, and we even have some organizations that are still working with our CARES Act funds. Those organizations are available to help businesses right now today. So you can visit our website at www.mbda.gov. And if you hit the button that says business centers, you'll see the whole roster. So we're ready for you. Arms are open and we're ready to go to work.
Well, Carmen West, Senior Advisor for Access to Capital with the Minority Business Development Agency at the U.S. Department of Commerce. Thank you so much for spending time with me this afternoon and sharing such great knowledge and insight with minority business enterprises across the country. We believe at the Chamber, I'm sure as you do, that if we're going to close the opportunity gaps, minority businesses play a very critical role. This is about growing and expanding opportunities for them to create jobs, to grow and expand, and to help make sure that every American has a fair shot at reaching their own American dream through business. Thank you again for joining us for this important session. Thanks, Carmen.
Thank you.
It is a pleasure to moderate such an impressive group of panelists. I'm the U.S. Chamber of Commerce's small business guy, and it's also an honor to be part of a whole of Chamber of Commerce effort to try and level the playing field for minority-owned businesses. Now, you're going to learn more from our panelists than you ever could from me, so let's just jump right into it. I'm going to pose the first question to TJ at Urban Grape, and before he answers, he's going to introduce all of us to Urban Grape. But the reason I'm turning to you, TJ, first is because you were the winner of our Dream Big Award Small Business of the Year this year. So congratulations. And my first question really is about access to capital and about some of the barriers that minority-owned businesses face when trying to get access to capital. Can you explain to our audience and our participants what are some of the ways that you have overcome these barriers to be such a successful business owner in Boston?
Yeah, Tom, that's an amazing question, and I look forward to answering that in one moment. But first, I'd love to give you a little insight on what my wife Hadley and I have created with the Urban Grape. We are a Black-owned and a woman-owned business in the south end of Boston. We are now an 11-year-old company. And again, thanks to the U.S. Chamber of Commerce, as we are the 2021 winners of the Dream Big Awards, we think about wine a little bit differently. We wanted to be able to create access and a safe space and an unintimidating space for all of you wine drinkers, right? It's a scary place to shop. And so we created our proprietary progressive scale where wine is sold and educated by the body as opposed to grape or place. And we've been very successful with that. What's also great about the Urban Grape is besides our retail store, we have an amazing online presence. We have done over thousands of virtual wine education events over the past couple of years. But most importantly, and what really is going to be our legacy with the Urban Grape, is that last year, after the murder of George Floyd, we were able to create the Urban Grape Wine Studies Award for students of color in partnership with Boston University's Gastronomy and Wine program, and then also paid internships with a few local businesses here in Boston. So we are really proud of that. We are now 4 students deep on our second cohort, and our first cohort have already gotten amazing jobs and are relocating from the East Coast to the West Coast. So we're really excited about that. And the reason that we created the Urban Grape Wine Studies Award is to actually create access for people that look like me in this tens of billions of dollars industry in the United States on an annual basis, where we typically don't have access to fine wine. A lot of neighborhoods that we grow up in, we don't even have access to a grocery store, let alone really good Pinot Noir. And I wanted to create an opportunity where I can show people that look like me in our area that here's a great opportunity to get into an industry that you really don't even know exists. One of the barriers that we've faced is that a lot of people don't see themselves in the wine industry unless they've grown up around wine. So we wanted to create something special for that. Financial barriers for us when we wanted to open up in 2010, after I was leaving the wholesale and restaurant business, was cash. We were coming off of a recession. No one wanted to give me a lease for a brick and mortar. And, luckily enough, because the stars have aligned, that we owned a house and we had a mortgage. So we were able to, take out a second mortgage. We were able to sell what we had in our 401ks and our savings. And we took a chance on creating the Urban Grape. And, a lot of the barriers are financial, but also a lack of network, which I believe we'll be getting into later on. So with that being said, thank you so much for having me, and I'd love to pass the mic.
I want to build off of TJ's point when he talks about lack of access and network. But before I do that, I want to introduce myself. My name is Nicole Elam. I'm the president and CEO of the National Bankers Association, which represents the nation's minority depository institutions, or MDIs. Our member banks are Black, Hispanic, Latino, Asian American, Native American, and women-owned and operated banks all across the country who are on the front lines of helping to close the wealth gap. What's unique about our member banks, is that they are majority owned or operated by people of color, and they predominantly serve minority communities. And so they are significant providers of small business loans in those Black and brown communities. What TJ said is so important, because lack of access to capital is certainly an important issue. But what we learned during PPP is the importance of having an established banking relationship, because right now we are seeing so many programs, both private sector and public sector, that are pushing capital out to small businesses, particularly minority owned small businesses. But what's missing is just they don't have that banking relationship, as we saw in PPP. And so those that had an established relationship, they knew about PPP, they got the assistance that they needed to apply for it so that they could be capital ready. And so what's important is that, people have these relationships, not just when they need them, but before they need them, so that they can learn about all of these, again, these federal programs, these state and local programs, these private programs that are out there, and they have what they need in order to get capital ready to receive those funds.
Nicole, thank you. Thank you so much for building on TJ's comments. So we've already heard, TJ, you actually have kind of a dual emphasis. Not only are you mentoring young folks coming into the business, you provided an example of you and Hadley combining resources, in particular, the asset you have in a house, to leverage and risk everything to build Urban Grape. Nicole, you certainly talked about what we hear all the time. That is, the worst time to ask for a loan is when you really need a loan. Mm-hmm. And so that creating relationships is critically important. Mikkel, I'll turn to you, and you're going to explain a little bit about your role at Chase, but I'd love for you to dig in a little bit deeper on Nicole's comment, and that is the relationship. How do you advise minority entrepreneurs and business owners to start building that relationship without starting at the point of saying, help, I need a loan?
So as Tom mentioned, my name is Mikkel Quarles. I'm the executive director of our Minority Entrepreneurs Program. What that means is we provide one-on-one mentorship and coaching to minority-owned companies. In that effort, we focus on existing businesses. And what I say is we want to help folks keep their doors open. So how do we do that? We spend the time, as TJ talked about, talking about access to capital. But Tom, to elaborate on your point, there are also a lot of other needs that a business has. So we think about talking about access to opportunity. We talk about access to information. And to the point that Nicole was making, those relationships you build with bankers prior to those needs is when you get to have those conversations. This is what my business is experiencing today. These are the challenges that I'm looking to face. The great thing, experienced bankers have the ability to give you advice about those situations and scenarios based on the experiences they've had of supporting other business owners. And so the team of folks that we have here at Chase that provide that one-on-one mentorship and coaching, some of them are reformed bankers is what we say, right? And some of them are business owners themselves. And some of them came to us as CPAs, some of them worked in public policy. But all of that is to say that we're going to spend the time working with you to understand what are the needs of your business today, what is the vision for your business tomorrow, and what is the infrastructure you need to ensure you have. Currently, we're in 20 cities across the country. This year alone, we've held over 300 events. We've interacted with over 19,000 small businesses, and we've mentored over 1,000 small businesses. And that mentorship program is a 6 to 9 month period of time that we spend with you. We spend that time, we complete a SWOT analysis of your business. We talk about the strengths, weaknesses, opportunities, threats, what's related to your industry, what you should be thinking about as far as the future of those needs. And then we help you along the way and help you to build what I call milestones to the growth of your business. And so as you do that, it helps you to really be able to celebrate the simple successes. I'm here in Chicago, and I was with a small business owner yesterday, and she's a young 27-year-old business owner that has got a business on the Gold Coast on Michigan Avenue here in Chicago. And she's off and running and doing a phenomenal job. But what she feels is the pressure of what has to happen next and not what she's accomplished so far. And so helping to understand the milestones, navigate the business, understand the challenges and addressing those things and planning for the future is critical and supportive to what we need to do. And that's where mentorship and support and engaging with bankers can support that.
Well, thank you, Mikkel. I think we've heard from all of our panelists just really the importance of relationships. Now, I'm a little bit biased. I think the greatest place to start those relationships are at chambers of commerce. There's thousands of different types of chambers of commerce. And so, when it comes to relationships, there's really no better place to start. But before we finish, I do want to touch on policy. I mean, we're based in Washington, D.C., so how can I not talk about federal policy? Nicole, I'll go to you. And we know that there is a gap when it comes to access to capital for minority entrepreneurs. What is one or two things gap?
Yeah, so I think one, they can continue to provide technical assistance, grant programs, and investment programs that invest in small businesses, like Treasury's Emergency Capital Investment Program, unprecedented amounts of capital that's going into banks. So in turn, they increase their lending to those businesses. The second thing that they can do is actually do business with small businesses, right? Do businesses with those businesses. That's the biggest thing that they can do. We saw the president's executive order focus on these goals for doing business with minority businesses. So that's the second thing that they can do. And the third thing is eliminate barriers. There are so many barriers. When you think about the Small Business Administration's program, for example, they only have about 3% of African-American borrowers who are participating in their flagship programs. Why? Because there are so many barriers to participation. So they need to start eliminating some of those barriers.
And so, Tom, can I elaborate on the coach?
Oh, of course, Mikkel. And then I'm going to close out. I'm going to close out with you, TJ. So get ready.
Awesome. So, I think there are a couple of things. As a financial institution, we have to understand that we can play a role in supporting minority depository institutions, right? And so as an organization, we're planning to invest over $100 million in minority depository institutions across the country to help them with their infrastructure to engage in the community so that they can build the technology and the resources that they need to support the businesses they interact with. We also understand from a public policy perspective, we have the ability to be influential and really begin to make an impact. And so our $30 billion commitment to advancing racial equity is focused on home ownership, affordable housing and small business, and as Nicole mentioned, it's also focused on supplier diversity as a part of our small business initiatives, where we focus on the amount of money we spend with minority contractors throughout the work that we do. I think the other piece that's extremely critical from a policy perspective is to begin to reimagine what it means to provide capital to small business. We've done it in a very consistent way throughout time. And what we're looking at now, to Nicole's point around the SBA, we've had a process internally where we realized we were getting loans approved and customers weren't taking them. We were having challenges with folks completing the application when we thought that they would get approved. So those are processes that are on us, right? That's not the SBA's fault. We needed to understand if there was a way that we could streamline and make it a more effective experience for the customers as they were looking to borrow with us. And as we do that, it reduces the anxiety. We can give more transparency to what is the type of lending you should qualify for, the dollar amount you should be thinking about asking for, and setting clearer expectations around if there's SBA support, why that should be celebrated and why that's not a negative for the business. And then think about the future of what that means for that business owner now that they've got stability. They also have experience. So as they look for larger and more complicated capital needs, they've got a track record that demonstrates that they can manage those smaller opportunities and build their way as they get those new and larger contracts. And so, like, as we think about that work, we can't just do it the way we've always done. And that's the most important part about the work that we're doing here at Chase, is just really focus on reimagining both the way that we get capital out the door and the way that we deliver it internally and manage it, and the experience that we provide to the customers as a result.
Well, thank you, Mikhail. And TJ, I'll turn to you. You're no stranger to the connection between government policy and Main Street small businesses. I mean, you sent the Boston mayor to Washington, D.C. to be part of the president's cabinet. He personally gave you a shout out a couple of weeks ago. And so when you look to your former mayor now being part of the president's cabinet, I'm sure you're thinking about, wow, what can Mayor Walsh be doing to help us as growing businesses, and in particular, the minority business growth that is experienced both in Boston and throughout the country. What's your advice to Mayor Walsh about what Washington, D.C. can do to help minority entrepreneurs do better?
Yeah, that's a great question. So here in Boston, we call him Marty Walsh. So what former Mayor Marty Walsh could do when he's now that he's in DC is tell our story, tell the small business owner's story that's here in Boston, because the story that's here in Boston is not unique. It's in every city across the United States. And if we have, a bigger voice with a little bit more weight where the policy actually happens, that's going to help everyone. Share his network to support businesses, to again, just tell the story. I do want to touch on one thing if we do have time. We talked about lending and borrowing from banks and stuff like that, but there's also a lot of investors out there that are looking to invest in small businesses, whether they're just starting off or they're trying to scale from an already established business. And what you need to do and have straight, you need to be on brand. You need to make sure that your story is transparent, that you provide a great company culture, and a lot of investors want to know about the person and the person that you're going to be providing your service to, as opposed to just what their return is going to be in 10 years. And I think that's really important to know. And I feel that financial institutions as well want to know the person, want to know what they're lending to, what they're investing in their community. So I think that's very important, is to be able to stay on brand and have a great company culture in your story.
Well, thank you, TJ. Now, I personally am inspired by the three of you. And I know a lot of your work with mentorship and relationship building is about inspiring entrepreneurs. And Mikhail, I'll start with you. What's one piece of advice to other minority entrepreneurs who are tuned into this about inspiring not only their own teams, but inspiring others to follow their lead?
I think it's small business owners that inspire the rest of us. Like, they are the ones that are taking the risks. They're the ones that are, they wake up thinking about their business. They go to bed thinking about their business. And the thing that I would say is celebrate the small things, celebrate the milestones, understand the impact that you're having both to your local community and to our economy at large by the work that you're doing. And know that all of us are more focused today than ever before to support you, and understand that the work that we have done is not the work that we will do. We'll continue to lean in and listen to understand what is the most impactful thing we can do to be of the greatest support to you. I remember seeing that there's an FDIC report that says that, for equity investment in minority depository institutions, the leverage of that is 8 to 10 times. So for us to invest in minority banks that provide capital in communities, the impact of that, even just our $100 million, there's $1 billion that we can get in capital out to small business. And so know that, we're looking at it differently, and we're definitely encouraged to continue to make a difference as we go forward.
Well, thank you. And Nicole, you represent minority depository institutions,
Yeah.
Black-owned banks. So how do you inspire minority bankers, and how do those minority bankers inspire communities to do business with them?
Yeah, I don't think that inspiration is the thing that they struggle with, right? Because
Right.
they are mission driven, they are impact motivated. So that's not really their thing. I think we are trying to focus on them to think bigger than their community, right? There is an unprecedented amount of interest in minority depository institutions right now. So how are you leveraging the government? How are we leveraging corporate America? How are we leveraging technology providers to do more than we've ever been able to do before? How do we really take this, what could potentially just be a moment in time, and really have some lasting systemic change? And so we've been hyper focused on partnerships with people that may seem like unlikely allies because of everybody's focus on closing the wealth gap and equity.
Well, Nicole, I have no doubt that you are leveraging both your members and their missions to the greatest extent possible. So I commend all of your work. TJ, we're going to close it out with you. And I'd love to hear, your perspective as a small business owner. When we hear these talks about relationships and inspiration and partnerships, your advice for an entrepreneur down the street in Roxbury who has this idea but is really struggling about turning that idea into a sustainable business. What's your advice?
My advice would be for them to come and knock on the door and take me out for a cup of coffee, right? Because whatever they're going through, chances are I've been through. And I think, reaching out to, the people next door to you, I think there's going to be some great answers there. And so I think, using your network and being vulnerable and going out and, not asking for help, not even asking for advice, just having someone to talk to and maybe, throw some ideas out of, because someone's going to have a different perspective than you, and then you can take that and run with it.
Well, thank you, TJ. Just hearing from you is really no surprise about why you are the Small Business of the Year. And all three of you, thank you so much for participating in this Equality of Opportunity Initiative program. All three of you are doing amazing things, and it's really an honor to be able to moderate this today.
Thank you so much, Tom.
Thank you.
Well, thank you. Thank you, Tom, and our esteemed panel. I'm Latricia Boone, Vice President of the Equality of Opportunity Initiative here at the Chamber, and excited to begin to close out this great program that we've had for today. But I do want to, take a moment to invite one of our guests from the panel we just heard. We actually taped that panel just a few weeks ago, and we have one of our guests that we're able to bring back because we've been getting such activity and interest around the questions that folks have and follow up to some of the content we heard. So I'd like to be able to welcome Mikkel Qualls with JP Morgan Chase for Business, to join me for some Q&A. Hello, Mikkel.
Hey, good morning. Good afternoon.
Yes, thank you. Thank you. I know you are busy and your team is busy, so we just appreciate you taking a little bit of time to join us for this. As we prepare to really bring this event to a close, and in fact, our Equality of Opportunity in Action series to a close for 2021, we thought it'd just be great to have you for a live Q&A session where we could answer some questions from our audience and really tee up the work that I think both our teams are going to be doing in 2022. So I am going to jump right in. And before I do want to say thank you again for being part of this critical conversation. I want to say thank you to Chase for Business for the partnership that has allowed us to really live out our commitment and you all's commitment to helping close the racial wealth gap among Black, Hispanic, and Latino communities, which is clearly aligned with the work we're doing here at the Chamber and our Equality of Opportunity Initiative. So thank you again. And I think I'm just going to go ahead and jump right in because I know we're anxious to get to some of these questions. I'm going to start, Mikkel, with a question that we have in the chat around, thinking about beyond just, we heard a lot about relationships and that local level approach. But beyond that, I think the question was more around the fact that so many lenders are geographically dispersed and in different places. What strategies banks, and I know Chase is doing work in this space, might have to incorporate technology or technology-oriented outreach to reach businesses that may not be in spaces where they feel like they have direct access to physical locations?
Yeah, it's actually a really good question. The first part of that I realize as I think about the answer is there a single location where business owners go to get information? And the answer to that question, as far as I can tell, is no, right? And so because of that, we have to think proximity, we have to think resources, and we have to think, how we blast information from a technology standpoint. So it's one, making folks aware of the work that's happening and the fact that the landscape for small business and support of small business has changed significantly. The approach that banks are taking to engage in communities that have otherwise been demonstrated as being outside of the targeted markets for banks, we're changing that narrative. We opened and rebranded a branch in Fifth Ward. We just opened one in Oakland, California, where it's specifically focused on our engagement in the community and focused on the minority businesses that are in those local areas. But outside of that, it is about technology. So it's about, how do we leverage social media to get the word out? How do we create more efficient infrastructure internally to accept applications, to lend to businesses where their experiences is more like what they experience in the other parts of their life, and where they feel less anxiety around the process. There's less documentation required. The time between application and decision decreases. And so we're looking at all of that from a technology standpoint to solve for those needs.
Yeah, I love that. I was participating in a roundtable conversation just months ago where Chase was also a part of, but we heard that we have to also start going to where folks are and really, adjusting and learning to accommodate to fit their needs so that we can best support and see success in our work. So I really appreciate you naming that and looking forward to lifting up some of those best practices as you are learning in your work. Another follow-up question in that same vein to some extent is, can you make any recommendations? I mean, we heard a lot of resources. We talked about policy, we talked about agencies and other things in this conversation earlier, but as we have a ripe audience of, I know, businesses, minority-owned businesses listening in today, any particular tools, resources, organizations that you might recommend that businesses should look at as they think about that next action step they want to take leaving this conversation?
Yeah. The first thing is know your business. Understand your business's numbers, your direction, and what it is you're looking to accomplish, right? So if it's a need for capital, when I was a banker, when I was managing teams previous to my current role, I got so many times that a customer would walk in, say they need a loan, tell me how much I qualify for. And that's not the way you should think about it. You should understand that based on what my business's operations are today, here's the gap that I need to solve for. And this is how access to capital helps me to solve for that. And this is at the dollar amount that is the minimum, maximum, optimal dollar amount that would help us to address those gaps. And so the tools that you're going to think about to solve for that could be something like a bookkeeping software. It could be a resource like a CPA or some other expert. Talking to someone on my team as a mentor or consultant that can help you to put those data points together. But the access to capital starts before the demand for capital or need for capital. And the foundation of that is understanding why you need it, how you're going to use it, what that does for your business. Does it create efficiency? Does it give you access to contracts you otherwise wouldn't have an opportunity for? Does it create the ability to expand into new markets? Like, there has to be a specific narrative that you're solving for. And that helps you to build that narrative around why the capital is going to be valuable, and also what the avenue is that you should go down to get access to it.
Yeah, thank you. Such concrete advice. I think it's really important. And the lesson in that, which we heard today, is you really have to know and understand your business. And it's not always about layering some particular model onto your business, but knowing your business and the needs of that and being able to adjust to accommodate and focus on that. So really appreciate that.
And if I could actually just add this additional point there I just thought about.
Yeah.
There needs to be a separation in the narrative between I'm less than 2 years in business, I'm in kind of a startup phase, and I'm really truly learning how to run and operationalize my business, versus I'm an established business owner. I've been doing this for a number of years, and here's the gap that my business has that capital addresses. The narrative around access to capital, we lump both of those scenarios into one bucket, and they really truly aren't. And the way that you lend to a startup is very different, or the way that you support the financial needs of a startup, I should say, not even necessarily from a lending perspective, but the way that you support the needs of that business are very separate to how you support an established business. And so we just need to be careful about lumping them all into the same bucket.
So very true. I couldn't have said it better. And to that point, I'm making a note because I do think that there's an opportunity as we are closing out for today, but there's an opportunity for us to revisit that and really create some distinct conversations around the experiences for entrepreneurs who are in different phases and of their work and where they are in their journey. So I'm going to move us to our last question for this afternoon or late morning, depending on where you are. And we are at the end of another year. Obviously, we've heard before earlier in the conversation around, the past year and a half, almost 2 years, and what some of our entrepreneurs have experienced. But we're moving into a new year, and I think there's some excitement and opportunity as we go into 2022. What are you and your team most excited about in your work as you are continuing to empower and support minority entrepreneurs?
Yeah. So the business that we set up started in October of 2020. And at that time, I had 2 folks in Chicago that helped me to start the business. We're now in 20 cities across the country. We're mentoring over 1,100 businesses. We've hosted and interact with over 23,000 small businesses. What I'm most excited about is we're just getting started. So the scale of the business that we're looking to grow means the impact that we get to have for minority-owned companies continues to expand. The partnerships we're continuing to build with CDFIs and other nonprofit organizations that make sure that we are supporting locally and staying connected. The ways that we think about access to capital within the firm and all the adjustments we've made to our credit policies and other things that we'll announce in 2022 around how we're going to deliver capital to the market. I'm extremely excited about what that work means. If I'm a business owner, I'm also excited about the fact that Chase isn't the only person at this game. Like, we're all trying to figure out, like, how do we continue to support small business as they are the lifeblood of our economy? And the fact of the matter is, like, whatever the limitations that you see today, like, there is a responsibility that the financial institution has to address those limitations. And there's a responsibility as a business owner. You have to understand the landscape and the challenges that exist and how you maneuver within them, which is why access to information and opportunity is so critical. I actually sit on the advisory board to an organization here in Los Angeles that is focused on how we improve procurement opportunity for the city of Los Angeles. I sit on an advisory board for an organization that's doing the same thing for the state of California and how they spend procurement dollars. And how we get those how do we get those contracts in smaller pieces or in prime contracts to minority businesses. And so, like, the focus around the work, the opportunity that exists, the landscape is there. Now, the critical piece about this is, like everything else in life, it's almost like you have to be ready for the opportunity that exists because it is here, and make sure that you're asking questions, you're raising your hand, and you're looking for those opportunities because they definitely exist, and they're going to continue to exist because there's more and more focus around these opportunities going forward.
Yeah, absolutely. Thank you. I'm like you, very excited because I do think there are so many opportunities that have been put forth and more to come as we move into a new year. And just looking forward to our partnership and continuing to be able to work with Chase and your team as you all are carrying out the great work across the country and communities across this country. So thank you again, Mikhail. And I look forward to connecting beyond this conversation. And with that, I want to bring us to a close for today and for 2021. On behalf of the U.S. Chamber of Commerce, thank you to each of you for your participation in today's conversation and our Equality of Opportunity in Action event series. This has been an amazing year for our work, where we've had the chance to engage so many important voices to address key issues through dialogue and action. Last year, we launched the Equality of Opportunity Initiative and made a commitment to unveil a robust new agenda that built on existing programs and proposed new solutions to closing the existing opportunity gaps in a number of key areas, entrepreneurship, of course, being one of them. And so we continue to be committed to this work and to building on these conversations to advance solutions and best practices. And we are looking forward to doubling down on those efforts in the coming year and bring business and industry, private and public sector together to drive meaningful change and have impact. I want to say thank you once more to our partner for this particular event, Chase for Business, and thank you to everyone for joining us. I encourage you to visit uschamber.com to find out more about the Equality of Opportunity Initiative and how you can engage in this work with us. We wish you and your loved ones a peaceful, safe, and joyous holiday season and look forward to coming back together in 2022.